Today we're going to talk about the 10 biggest option trading myths that exist out there. I thought it was interesting to cover this because you can hear a ton of things when it comes to trading or just trading options in general, and I thought it was actually worth talking about it and talk about what are the biggest myths and what is the reality of it. So without waiting, let's get into it. So the first myth that I want to talk about is that trading options is a zero-sum game. And that's an interesting one because that's something that is quite popular to think that trading in general is a zero-sum game because you win, someone else is going to lose. It's not as simple as just saying that when someone is winning, someone is losing, because there's nothing that tells you that when you buy an option, let's say at $1 and then you sell it at $3, so making a profit, there's nothing that tells you that the other party, the person that is buying your option at $3 when you're making a profit, hasn't actually sold it before at maybe $10 and now they're making a profit of like $7 on the option. There is literally nothing telling you that this person is actually making a loss. And actually that also implies that you're only dealing with individuals, when in reality you're not just dealing with individuals. You could be dealing with a market maker. So it's not as simple as just saying when there is a winner then there is a loser. And by the way, I'll put the link of that webpage like in the description of the video if you also want to check it out. It says that, as Mark Wolfinger explains here, if I can buy a call option and earn a profit by selling at a high price, there is no reason to believe that the seller took a loss corresponding to my gain. The seller may have hedged the play and earned an even larger profit than I did. And it's true, as I said, there's nothing that tells you that this person is actually making a loss on the trade. But I understand why people might say that this is a zero-sum game, and I get the argument, like, you know, not everyone is obviously winning when it comes to this, and actually most people are losing, but that's an interesting myth, or at least argument that is out there. I'm curious to hear what you think about this. Let me know in the comment section. The second myth is that it's easy to make money with options. So, you know, like, first thing, there's no easy money. Like, regardless of what people want to make you think, regardless of what you see on YouTube, on Google, like, there is no easy money. And if someone is telling you that there is easy money somewhere, they're usually financially incentivized for telling you that there is easy money somewhere. So you can either buy the product, buy the training, buy whatever it is. So it's not very objective of them. After that doesn't mean that you cannot make money. I want to stress and I want to emphasize here that it's not because it's not easy to make money with options that you cannot make money with options. Like, you actually can. However, thinking that it's easy, no, it's not easy. Like, you can, but it's not easy. So the next one, the only profitable way to trade options is buying calls or puts. Well, once again, there is no edge in actually either buying calls or puts or selling calls or puts. It's just two different ways of doing things. It's just two very different things. For example, when you buy options, you're going to tend to have a low probability of profit. So low pop means low probability of profit, but a higher reward. Like, and that's just normal. Like, you can't have the best of both worlds. And that's usually how it works when it comes to buying options. However, on the opposite, when you sell options, you tend to have a high probability of profit, but obviously, because you have a high probability of profit, you'll tend to have a lower reward. And that's normal. Like, as I said before, you cannot have the best of both worlds. Like, you have to choose your camp. Do you want to win more often but then earn less when you win? Then maybe go for selling options. Or maybe do you want to earn less often but then when you win a lot more? Then maybe buying options is better for you. And to make you see that in a very visual example, I like to always take that example of the balance. On the one hand, you have the pop, the probability of profit, meaning how often do you actually win. And on the other end of the balance, then you have the reward. And, you know, you can have one, but you cannot have the other. If you want to have a high probability of profit, then great, but you cannot have a big reward. However, on the other hand, if you want to have a higher reward, then you'll have to give up the probability of profit. So you have a low probability of profit, but a bigger reward, meaning that you'll earn more when you win. And that's just what options is. There is no edge, there is no secret strategy or anything. You're just choosing a camp, and if you want to have like a high probability of profit, then you'll earn less. And it's up to you to choose whatever you're comfortable with. And honestly, it took me a long time to figure that out, that there was no secret strategy, that regardless of what you hear on Google, like either buying option is better, selling option is better, there is actually nothing that is better than the other. Like, some people think that selling options is like picking up pennies in front of a steamroller, and honestly that's quite fair to say that. Some other people, and I think I belong to that group, think that it's better to sell options, it's better to play a game when you have a high probability of profit, even though that when you lose, your losers tend to be bigger than your winners. But overall, you know, you're trying to stay profitable overall. And some people think that the opposite is better. So, you know, it's up to you to choose what you want. Another myth that this website actually says that only 90% probability strategies make money. So this one, like, I mean, I don't really understand why, you know, like only 90% probability strategies will only work. If you base yourself on the concept that I just explained before, this concept of balance, then you absolutely can build a strategy that is going to win 90% of the time. However, it doesn't mean that you're going to be profitable in the end, because if you have a loser like just one and then that offsets every other winner that you had before, then it's a bit useless to win 90% of the time. Personally, I haven't really heard that often that only 90% probability strategies work, but let me know in the comment section if you've heard that a lot. But it's true that I would tend to say that selling options is probably considered as a way to make money, but in the end it's just the other side of the balance. Like, the goal is not necessarily to win all the time, it's more to stay profitable at the end, taking into account the losses that you're going to have, because yes, you're going to have losses. Like, even though you win 99% of the time, the losses are going to come at some point. Just look at, if you sell options and then you sell an option on Snap and then the stock tanks like it did last week, those are the type of losses that will happen. Very, very few, but when they happen, they will hurt. And overall, if you're still profitable, then great. The fifth myth, and this one I love it, like, selling naked options is very risky. And that's something that I talk a lot about. Like, selling naked options in general, the product is not as risky as much as what you do with it. So it's not options by nature that are risky, it's what people do with them. Like, when you use too much leverage, that's where options can really become like weapons of mass destruction. And that's crazy to see sometimes the losses that people are going through because they have used too much leverage, they have traded too big. And honestly, the position size is probably the single thing that I think is the most important, like, when it comes to trading options. Like, that's where genius fails. You can basically come back from any mistake that you've ever done in trading it, basically, except trading too big. When you trade too big and you just kill your capital because you've had a huge loss, then you can't come back from that, like, you don't have unlimited money. So saying that selling naked options is risky, I tend to argue that this is not so much options as much as the leverage that is being used. And to be honest, you can sell actually a credit spread, so technically, you're protected, your max loss is actually defined, compared to selling a naked call where theoretically your loss could actually be unlimited. But if you trade too many contracts, even by selling a credit spread, you could actually ruin yourself. So it's not so much about selling naked options as much as it is about the leverage, as I said. The sixth myth is that 90% of options expire worthless. And that's usually like an argument in favor of selling options. And once again, like, this is quite interesting that they say that according to the CBOE, around 55 to 60% of option positions are closed prior to expiration, and only 30 to 35% of options expire worthless. After that, I've seen different numbers when it comes to how many options actually expire worthless. So I've seen like 50% here, they say 30%, some people say 90%, and I don't think that it really favors any of the sides, like either buying options or just selling options. I think, some options are expiring worthless, but it doesn't really tell you anything when it comes to actual profitability and risk management. The seventh myth is that only option sellers make money. And, personally, even though I like to sell options and this is the main thing that I do, I don't think that only option sellers make money. Like, when you buy options, you can absolutely make money too. You won't win as often just by the nature of buying options, but when you win, it's going to be a lot more. Look at, for example, the fund that is being managed by Nassim Taleb's friend. Like, during the crash of 2020, I don't remember how much percentage of return on investment they actually won, but it was insane, the return on investment they had. And if you, for example, go for a black swan event strategy, meaning that you're only going to bet for the very, very rare cases, the very rare events that happen, meaning that you're going to only be right 0.5% of the time, but when you win, you will be earning so much that it will offset all the small losers that you previously had. That's also a way of trading. That's not necessarily the thing that I would love doing, but I think that's absolutely possible to earn money like this on the long term. The eighth myth is that you should only trade options in a tax deferred account. This one is more like a tax preference. Like, some people love to, for example, trade SPX for tax reasons. This one, I'm not really like in a position to say like if it's a myth or not. Like, I trade with a margin account. Some people love to trade with an IRA, and that's fair. Some people with like a cash account, that is more up to you and how much taxes you want to pay. Like, it's not really a myth or anything. The ninth myth is that options are risky because they use leverage. It's not really a myth. Like, like if you use too much leverage, you will be crushed. After that, it's not because you use leverage that you will necessarily lose. Like, there's a fine balance in how much leverage you can use, and after that it goes too risky. But there's a fine line, as I said. So for me, honestly, I think if you're more fearful of leverage, it's better than being the opposite, being too confident with with leverage, because I think like, you know, that's really where a genius fails, honestly. Like, as I said before, you can come back from any mistake, but not trading too big. And some people, they actually get in debt from using leverage. So, you know, you really need to be careful about this. But as I said, like when you trade small and that you make sure that the majority of your account is still in cash, and, you know, you allow yourself, for example, to manage your positions, and because you have traded small, it doesn't take too much capital. When you do all of this, honestly, like options are not that risky. And actually, a lot of studies have been showing that trading options, when it comes to being both long and short, can actually reduce the risk compared to someone who would have a portfolio of long stock. And, you know, that shows the reality. After that, not everyone wants to go through the process and the work of actually trading options, but it can actually reduce risk overall. But of course, it's when it's used well. Like, it shouldn't be like said like because you trade options it's actually less risky. As it says, like leverage can be a killer. And last but not least, the last myth is that options are only for short-term trading. So this one is absolutely false. I mean, you can, for example, buy a lead, which is an option that has like an expiration that expires in at least a year. And, you know, you can do that. And I don't think that's short-term if you, for example, go for an option that is expiring in 2 years, 3 years or more, you know, that's not really short-term. So for me, this is not even a discussion here. It's just not true. After that, for myself, it's true that I tend to use options for more like short-term investments, but that's just the way I do it, you know. It doesn't mean that you have to do it that way. Like, you could also, for example, sell options that are going to expire like in a year or two, and, you know, fair enough. Thanks so much for watching. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.